Good afternoon, everyone. Thanks for being here with us today. Glad I made it to the stage without incurring another foot injury. We're going to shift gears a little bit, and in the next 40 minutes, we're going to walk you through some of the Chinese onshore regulatory requirements that impact global FIs and tech providers, data and innovation strategy, and how firms can practically go about that. So we've lined up a stellar panel for you today. On my far right, we have George Jia, Country Manager, Greater China at DTCC. On his left, we have Hasan Rauf, Head of Capital Markets, Business Development, APAC and Japan at AWS, Amazon Web Services. On his left, we have Tim Taylor, CTO and Head of Cloud Services and DevOps, Asia Pacific at HSBC. And last but not least, on my right, James Zheng, Management Consulting Partner at KPMG Advisory in China. And I would like to remind all the attendees in the room that we are here also to take your questions. So please do scan the QR code on your table and submit any questions that you have for the panel. And James, I'm actually going to start with you, just to set the scene a little bit. Can you walk us thematically through some of the regulatory requirements in China that impact FI's tech and data strategy? We've heard on a number of occasions earlier today that China is different and firms will have to navigate that. Yeah. So can you please walk us through that on a thematic basis?
Sure, yeah, okay. Good afternoon, everyone. So yeah, I think China is always at the spotlight. Okay, when we talk about data, right? So data cross-border, CBDT, all those topics. And when we talk about the data implication, and a lot of feedback, initial feedback will be like, oh, it's a universal. A lot of implications, topics, and very complicated. So if you look at the data cross-border restrictions, and not only that, think about the more and more strengthened the regulatory and information disclosure requirement, reg reporting requirement, actually bring a lot of thinking from the global company when they try to think about the China IT strategy. Because when you look at the data complexity, data cross-border availability, and impact operating model, processing, ownership. So all those factors connected together, this will drive a big topic. Normally we say China data program, but if you look at the details, it's the devil in the details. If you look at the data itself, for financial institutions, we have individual clients, we have corporate clients, we have institutional clients. And normally if you look at the information data category, just like a matrix view, we have a client profile information, we have transaction information, we have some financial information. Overall, it's just very simple, 3 by 3. But the devil's in the details, because we put every single data, drill down to the scenarios, and put into the process. This will create a lot of new questions, whether if I don't have those information, or process, operating model, current system setup, should I change? So this triggered a lot of questions. Actually, I worked with some big banks going through that assessment journey. Very key message is, first is, we need a very agile attitude to look at the China topics, because there are too many moving targets and dynamics, and even some regulation side need to have a further detailed guideline implementation guidance. So this, when we nail down the overall IT strategy, in particular, I think Tim will know better about the infrastructure, right? New application strategies. This will have a lot to discuss. So this is, I think, the first thing. The second thing is, it's beyond technology. Okay, so if we are talking about the data, behind it is the ownership, is about process, is even about governance, and also roles, responsibilities. So if you don't have those information, then everything needs to change. So when we say the data program, we need to put into a more holistic view. So this is the second thing. Ultimately, yes, when we look at all those components, this will impact your operating model, people headcount, cost structure ultimately. So that's why may have some impact on the business model as well. So you may have more selective about which market or client segment you want to focus on. In overall, individual side, that will be very tight. But corporate and institutional, we still keep positive, because we still connect with the world, as Howard just mentioned, right? So we are connecting. We are not really shut the door. So corporate and institutional, we are still quite positive, but individual overall, the control tightening trend is very clear. Thank you.
Great. Thanks, James, for setting the scene so very well. And then perhaps Tim, to stick with you, how does that resonate with you, and how is HSBC balancing all this with your operational efficiency and your digital strategy onshore in China?
Yes, to echo some of those comments, we started on a cloud journey about 4 or 5 years ago. And there's a bit of a myth regards cloud, the adoption of cloud architecture, that is automatically assumed that's public cloud. The principles of cloud architecture gives us an agile framework of architecture to deploy services. On top of that, there are some basic housekeeping that is required, and that starts with data labeling, to echo your points again. So the bank's been going through a transformation journey and is still proceeding through that. Our strategy is well publicized. And the principles of the cloud architecture actually gives us the agility to both react to the needs of the customer, but also in tune with the changing regulatory environment. And by that I mean that it's not unique to mainland China, I might add. The environment is ever changing in many jurisdictions. But by having that agility from your technical platform, gives you the ability to not only move towards the target state, but be able to articulate where you are today. In other words, what is the delta? And first and foremost, you need to understand what your assets are. You need to lay out a strong governance framework to both manage your current state to target state roadmap and provide the regulatory interfaces with that assurance that you have control. We have approached mainland China like every other legal entity from a governance perspective to ensure that we can record all actions, regardless of whether they're residents in geographic China, but more importantly, so we can articulate any data that affects that question. So when we are challenged, where is the data hosted and how is it processed, we can do so. This is an enormous undertaking when you're a bank of our size, but the good news is you lay out the foundations of these frameworks, these principles, and whilst you're transforming the legacy, all of your net new is compliant. And 70% of what we've deployed on cloud, private cloud that is, in mainland China, is net new. Yes, we're transforming the existing estate, but we're deploying new all the time. And the rate of development and release is just dwarfs on-premise. So the traditional stack is absolutely relevant, but the principles of cloud architecture and the principles of data architecture are imperative to a successful strategy.
Great, thanks, thanks, Tim. George, perhaps over to you, just to share the market infrastructure's perspective. Like, how is all of this impacting DTCC's setup? How do you guys go about it?
Thank you, Laurence. Thank you, Laurence and ASIFMA for inviting me to this conference. I mean, it's very straightforward. Data is asset. Safeguarding of your own asset has been a very focused area for most market participants as well as regulators. So being a US utility with a global footprint, DTCC has been striving to protect our own data as well as our clients' data while complying with local regulations. A couple of years ago, CSRC invited all service providers in China who are dealing with cross-border data transmission to do a filing with them. And after consulting the external legal counsel, we concluded that data processed on DTCC system are not critical transactional data, cross-border transactional data. So we are not in the scope of this regulatory requirement. So this is an example how, while you better understanding the local regulation, you can find the right or most suitable way to come up with your data strategy. Early this year, we published a white paper on data management and data strategy. And on that white paper, we made some bold forecast, hypothesis, if you like, in terms of trend of data management in the financial market or financial industry. I took some notes from that white paper I want to share with this, today's audience. There are 4 hypotheses or forecasts we made. The first one is data will become more accessible in our industry. Secondly, interconnected data ecosystems will create a new infrastructure layer for the financial industry. Third, capacity will be freed up to focus on data insights. Last not least, the fourth one, data standards will become more open source. So while we are sitting on pile of data and creating data by running our own business, the data management, the data storage, even the data exchange with our business partners became so important. On top of all this, data privacy or data protection become even more critical than before. So we also believe that data privacy tool will continue to evolve, which will encourage or will enable more sophisticated collaboration of individual firms to preserve their data privacy even better. That would be my initial thoughts.
Great insights. Thanks for sharing some of the takeaways from that paper as well. Hasan, I want to move back to, so Tim introduced the topic of cloud, so I want to perhaps dig a little bit deeper into that. So you're obviously representing one of the global CSPs. Many of our member firms are increasingly looking at leveraging public cloud. Some firms have a cloud-first strategy. Again, China might be a little bit different, as has been discussed today. So as a global CSP, how do you navigate these requirements and these China specificities, and how can you help specifically your FI clients, you represent capital markets, leverage public cloud and your services in China?
Sure, thanks, Laurence. So from an Amazon Web Services perspective, we leverage 2 local providers in China, one in Ningjiang and one in Beijing. So we actually have 2 availability zones in China. And what that enables us to do is, by leveraging the local partners, they comply with the local regulations as well as they have the necessary telecom licenses for us to be able to operate in those markets. Fragmentation in terms of technology is nothing new in that respect, especially when we talk about Asia Pacific. We've experienced that in Taiwan, in markets like India, as well as Indonesia as well. And the basis that you're leveraging Amazon Web Services, you have the ability where your data, especially the data that's residing in China, is isolated from all other availability zones. So saying that, you are empowered where you control the data, you can choose and store the data, and then you can allow access and permissioning to that data as well. There are 2 such cases, and there's a number of global financial institutions that leverage Amazon Web Services within China, especially for their data, and also leveraging Amazon Web Services outside of China for their other branches as well. But I'll touch on 2 such customers. OceanBase. OceanBase actually started leveraging Amazon Web Services Marketplace, which is an e-commerce sort of platform where you can actually subscribe and you can sell all your sort of applications, whether it's softwares, anything that's cloud native. And that was key for them deploying an international or overseas strategy to be able to penetrate their business across and outside of China. The other one I would say is Xinhao from Shanghai, which is more data services, and they're naturally leveraging Amazon Web Services in China as well. And that's where they're able to isolate their data as well. So I think, as long as you're able to comply with the regulatory requirements and able to manage your data in a cohesive manner, it's no different to any other market in Asia Pacific.
Great, thanks. And just to follow up on that, Tim, like you mentioned, just to go perhaps a little bit deeper practically in your cloud setup in China, you mentioned private cloud earlier. Can you perhaps walk us through that, and perhaps to level set the audience here, perhaps also explain what you understand with private cloud before you...
Okay, so that's a good point, because a lot of people mix up definitions. So, I mean, we call it direct cloud, public cloud, is your traditional, my esteemed colleague to my right, Google, Amazon.
Thank you.
Am I allowed to mention the other? That essentially you're using their managed services capability. A private cloud essentially uses the same architecture principles, but you host it yourself, you manage it yourself, but you're still leveraging containerization, microservices, the same principles. Our strategy for mainland China is, for us to operate at scale, we need to wait for what's known as the Financial Community Cloud, the FCC. That is the Chinese regulators' vision for the adoption of true public cloud services within mainland China. In anticipation of that, we were not going to wait for it. We chose to deploy a private cloud so that we could leverage that agility whilst remaining fully compliant. But then at a point in time when FCC is released, and so long as we meet all those stipulations, the premise is at some point we would then leverage the FCC Community Cloud. The same point applies to what I said earlier, though. The key thing for myself is that leveraging those architectural principles, ensuring you have the data fully recognized, as in labeled, understanding its classification and its geographic footprint, both from rest and transport. They all need to be fully understood by yourself so that you can demonstrate governance both within mainland China and as a cross-border transaction. So it's not really limited our strategy per se, other than our preference, wherever possible, is to leverage our public cloud providers, but we have a full strategy of adoption, because not only is regulatory requirements a perspective, but there's also things like latency. So we have private cloud not just for regulatory requirements, it's also for other functional and non-functional requirements.
Thanks, and thanks for mentioning the Financial Services Community Cloud as well. Actually, one of the 150 recommendations in the paper was really the need for clarity around that Financial Services Community Cloud. And the Financial Services Community Cloud, you can simplistically think about it as a part of the cloud with a specific set of controls, etc., tailored to the financial sector, to put it very, very simply. The advantage of that will be that hopefully that will lead to FIs being able to use the cloud. The downside might be, but the devil will be in the detail, that perhaps not all the full scale of capabilities and products of the public cloud will be available. But we're hoping that at least it will bring some clarity. Yeah. I think in the meantime, and thanks for walking us through that journey. As James, perhaps a question for you. Like Tim was describing how in the meantime they're using the cloud principles, but on their own on-prem private cloud technology. Having heard the other panelists speak, it sounds like still a lot of extra investments need to be made in China to comply with these various requirements. So really, what would be your advice, having worked with many clients, in terms of what's the best architecture to still achieve cost efficiencies while operating in China?
Oh yeah, so this is a very, very big question. So what's the best architecture? Okay, so maybe I can starting from what must be done, okay, what we will foresee. So first, when we look at the new tech platform build up, so you need to think about the function, think about the data, think about the infrastructure. And normally it's a traditional model is more like a waterfall, right? So we think about the function, non-functional, then we look at the sizing, infrastructure, and maybe some data. But now we need to move together. Okay, so this will create a lot of collaboration model and also how you really build up the new platform. And every single new platform, you need to think about the strategy. Your data onshore, your platform onshore, you go for cloud or not? Do you want to keep the flexibility? Okay, so this is, I think, the architecture first. That let's try to decouple a little bit. So not mingle together. I just want to put an application. So when you look at the application, be very clear about the functional part, the data part, infrastructure. The second thing is, I will say, maybe not really the technical, the architecture, but try to enhance the local data governance. This is really serious topic. Okay, so I understand a global company normally don't like to put the China business or franchise to have a lot of heavy governance structure set up because this means cost. But according to all those data-related regulations and more high expectation in terms of the data collection, accuracy of the information disclosure, the local data governance setup is very, very serious. Onshore team, the local entity leadership need to be accountable really for what need to transfer, why, how, and ultimately the data receiver. How do you really protect those data? And how do you make sure this data transferred, for example, is still used for fit for purpose? So these topics normally be ignored because it can be even in regional level topics or even global topics. But this is very, very serious onshore topics. So when we do have experienced the latest on-site inspection, when they have the IT or even in the overall session, regulator will direct ask about, hey, show me your local governance. So they really want to see this change. This is the second component. The last one, maybe also I try to leverage this platform, try to clarify some definitions because a lot of questions coming from my clients, sometimes we see system onshore, data transfer restrictions, China for China. So let's try to distinguish and try to highlight the different angle. So first, expectation from regulator for onshore legal entity is always you can run more independently rather than rely on everything to offshore. So platform onshore, in particular the core business platform onshore, is always the expectation. This is never new requirement. This is always the expectation. But due to some grandfathered rules, maybe there was some confusion to say, okay, fine, maybe regulator can accept. Regulator always has that expectation. Now we plus have some data protection and the data restrictions, which really triggers whether you need to think about the platforms need to be onshore. So then come to so-called China for China, right? So the topics. I will strongly suggest that for regulatory reporting, or maybe even wider definition, local regulation, regulatory related topics, let's think about more openly used local platforms because they understand better, they have a more connection, more adaptive and fast response. But still from the overall architecture, when we look at every new component, we still need to keep a global operating model. I'm still a supporter of a global operating model because you can never build up a totally different architecture. So there is no perfect answer, but I think overall you need to see this data layer will be more and more important when you build up the tech platforms. Yeah.
Linking local platforms with the global
yeah.
operating model.
We call them local or global, so you need to think about the strategy, right?
Okay. Actually want to shift gears perhaps a little bit and talk a little bit about cybersecurity as well. And the reason I'm asking, and specifically cybersecurity for cloud, The reason I'm asking is, as my colleagues have mentioned, when we met our friends who were in the room at NFRA and CSRC a couple of weeks ago in Beijing, it became quite apparent, and when we're speaking to other regulators elsewhere, becomes quite apparent that one of the main concerns regulators have with FIs using the cloud is cybersecurity. Like one of our arguments is always like, at least certainly for smaller firms, like the resources and investments that CSPs put into cybersecurity runs into billions and billions and billions, and therefore like FIs are able to leverage those investments. So perhaps Hasan, sorry to throw this one at you. Like, what would be like? How would you? With what data or like? Would you convince like regulators of really the strong cyber posture of public cloud?
Sure. So I think a lot of it depends on first understanding where the data sits, where the data resides, and understanding the classification of data as well. So naturally, when you look at the China market, you know, the greatest concern, which is a fair concern, is any personal details relating to Chinese nationals, you know, being sort of shifted outside of China and being fully sort of exposed in that regards. So there's that sort of control level there. So naturally for a financial institution, if your Chinese national customers, that data is leaked, then there's a concern there. But when you start talking about transactional, you start talking about, you know, from a trading perspective as well, that's a very different level of data as well. So once again, it's first, I think, understanding the classification of data. The other great thing is, look, when we start talking about security, and you know, as Tim rightly pointed out, a number of customers like NASDAQ who are also leveraging the cloud. In fact, NASDAQ, one of the largest exchanges, stock exchanges, is leveraging the cloud for their matching engine. That's a big thing. You don't have any stock exchanges in Asia Pacific that are leveraging the cloud for their trade matching engine. So NASDAQ being one, and I think that's a great sort of story in terms of the whole migration and the whole sort of transformation journey that NASDAQ sort of embarked on. You're starting to see interest develop from exchanges across Asia Pacific, but I would say Asia Pacific is still a little bit behind the European and US markets. But it's understanding these, and then when you start looking at a lot of the sovereign wealth funds, a number of sovereign wealth funds are leveraging the cloud as well. So the parameters are there, the controls are there, and I think especially when you take a shared operating model, you're leveraging a third-party infrastructure like Amazon Web Services. However, it's you that controls where the data is stored, who's got access to that data, and what data you are storing. So at the end, it's still the accountability still sits with you.
Thanks for that. Tim, I see you nodding. Did you want to add anything to that?
I would just add the fact that the capability that the CSPs provides is based obviously upon that architecture principle. And the simplest way to explain it is the fact that we all get patches or updates for our phone or our laptop. It's instantly applied across your entire estate. That is the advantage of the cloud container model. The fact that, number one, you're minimizing the impact because you're obfuscating an operating system completely. So if you are truly using containerized services and microservices, then the biggest culprit of security exposures is the operating system. But not only that, the rules, the patches, the updates, whatever it is you want to apply is instantly applied. And that is the capability and scale and flexibility that you gain from a CSP. And as Hasan has said, it's at your controls. You apply your controls, your requirements into that. These guys are compliant to our controls. It's not the other way around.
Thank you, Tim.
Yeah.
Thank you. But the other point I would also add to that is scale, right? Because let's face facts, right? Capital markets, when we talk about capital markets, it's interesting that we are so fragmented because from an Asia Pacific perspective, you've got a domestic workflow. Then you've got a cross-border sort of workflow, and then you have market by markets as well. So there is fragmentation. That's always going to be there. Even if China eliminates that fragmentation, you're still going to have challenges in other markets like India, for instance, Indonesia, for instance. So how do you leverage a global operating model in that respect? And this is where I also think when you start leveraging local sort of deployments of applications, it enables you to be able to harness into that domestic sort of ecosystem, but yet still leveraging a global architecture.
Great, thanks. We know we have our friends from the regulatory community in the room, so I actually want to ask George and Tim if they're recognizing where the priorities and supervisory and regulatory requirements of the Chinese regulators are. If there's one thing that you would recommend or ask, what would that be? Can be part of our 150 recommendations, or we can add a new one. Perhaps, George, I'll start with you on that one.
That's a new and extra.
Sure. I mean, excuse me. I think, when it comes to, data privacy or cybersecurity regulations, I mean, it's nothing new in China. In the US, we have a FINRA consolidated audit trail, rules. In EMEA, we have the Central Security Depository Regulation, CSDR, which all very specifically regulate how financial institutions should be protecting or safeguard their own data or their clients' data. I think from regulatory perspectives, they are aiming for the same goal, to maintain the stability of the financial market by maintaining to safeguard the data privacy of each of the owner of the data. So in that sense, I would suggest that there could be more conversations or cooperations between regulators in different jurisdictions to try to standardize the rules, or even in some cases the format they are requiring their local market participants to use for submitting, data protection, measurements or reports. So that will make both global as well as regional enterprises life much easier and cost efficient.
More collaboration and standardization. Tim, what would be your?
I mean, I would echo some of those comments, but also remembering or reminding everyone the regulator there is there to protect the economy of that country. That is most basic function. So everything they're asking and everything they're challenging it on is perfectly logical and reasonable. And by the way, as you said, most of the other jurisdictions are asking the same thing. It's amusing as when we do the assessments of the different regulators, 90+% is essentially the same thing, just different language. My only ask is, could they go a little bit faster? Just a little bit, because FCC's been waiting for a while. That's all.
Yeah.
But everything they're asking for is perfectly logical.
Speed and standardization. And then James and Hasan, perhaps I want to ask you a recommendation actually for your clients, for the FIs. What would be your one piece of advice for them? James? Yeah, maybe, again, the data governance. Try to take it seriously rather than put as just a structure. Really make it happen. Stock take your data assets onshore. And also the last one, don't be too conservative. I mean, too conservative means, oh, I need to do a lot of reaction now. I made a lot of investment decision now. So we need to keep a relatively open mind. Why I want to say that? First, as I said, China never want to decouple with the world. Okay, I come from mainland China. I still want to emphasize the message. I think regulator also highlight that, not only me. We never mean to decouple from the world. Okay, we will not shut the door. Okay, so reciprocally, we will also have outbound investment. Think about the global obligations. So we need to have a lot of communication, and maybe education is not the perfect word, but I think a lot of
share the feelings, right? So think about ICBC New York. How do you think about one day you don't report to local regulator? The same reciprocally, how can you imagine a global bank or FI can never report to their headquarters because of the data restrictions? So far, I think a lot of clients here, I think you may go through, your onshore entity may go through the CAC assessment. You did not see any rejection, right? Overall, they just want to know what happened. What's the real data? Do you really understand what happened? This is the regulator's purpose. So this is very, very important. Don't be too over-conservative in a lot of investment decision because it can kill your onshore operating model and business easily because of the cost. And you may not be correct. There was something changing. So this is maybe my advice, yeah.
It goes back to the need to remain agile as well. And then Hasan, your one
Sure.
piece of advice.
I think understand your transformation journey. So if you're a global financial services operating across multiple markets, understand your transformation journey, understand the sequence, understand the requirements as well. And it's not necessary to reinvent every single time. There's enough utility models, there's enough providers for you to be able to leverage, which brings you scale and also gives you much more local efficiencies in that respect as well.
Thanks so much for sharing all these great insights. What I took away is like the need to remain agile, importance of your data classification, the importance of governance that was mentioned a couple of times. And interestingly, maybe China is not so different after all. It was mentioned a couple of times that various other jurisdictions have very similar requirements. So the industry is quite well equipped to deal with those. So thanks very much for sharing your insights. Thanks to the audience for listening. I'm sure they'll take questions if you have more over the coffee break. Thanks, everyone.